Zimbabwe's economic slowdown appears to have burst the traditional resilient property bubble. Increasing unemployment and decreasing consumer demand has sent the property market in Zimbabwe into a slump with huge losses for investors since last year. The country's real estate agency council says the rate of residential and commercial rental defaulting has tripled. It, however, remains optimistic that the dark cloud will pass.
Felix Kwande proudly shows off one of SABC Bank's newest offerings in upmarket Harare. Despite the $115,000 asking price and the stiff 25% deposits, the units sold out before they were officially on the market, mostly to young professionals and locals living abroad. It's one of the rare success stories in a sluggish property market.
We have a few funders that have given us money without mentioning names, but they are banks, some in Africa, and also we have had money from the Eastern market. What we actually do is to find a funder that will give us funding specific to the project. Right now we have 10-15 projects that we have in mind. Some are already in place, and projects that we have already done, we have sold.
Elsewhere, property developments in upmarket Harare are floundering as the property bubble bursts. Industry experts blame a liquidity crunch and low investor confidence ever since a disputed election in 2013. Banks are struggling to secure project and mortgage financing, while the occupation of commercial and industrial rental premises has slumped to between 60% and 80% as many companies inch towards closures. The Real Estate Agency Council says rental defaulting rates are as high as 50% in 2014.
Landlords and managing agents have always proposed a rental reduction so that the tenants can afford, sometimes as much as 50%. And of course, from the landlord's position, because they are also trying to protect their investment, they have opted for no rental change. So you find that overall, rentals have not escalated, but they have not changed, and still the tenants struggle to pay.
But with 1 million people on Harare's waiting list and a shortage of high-end commercial suburban properties, the body believes that in the medium term and with the right political pronouncements, the tide can turn.
It's really the last thing to collapse. And it may go up and down, but the trend always remains the upward trend. And it's a solid investment. At this point, I would say I expect it to go up. I really see, particularly medium to long term, particularly if political solutions to our nation do come up. We have a serious backlog for all kinds of types of properties. As long as the economy booms and changes, we are definitely going to see a lot of activity in the property market.
But the property market is not the only sector to be hit by the weakening economy. Authorities have revised the 2014 growth rates from 6.1% to 3.1%, caused by lower output in mining and manufacturing and increasing company closures. Shinga Nyoka, SABC News, Harare, Zimbabwe.
Well, with that, let's take a look at how the African markets and currencies have been performing.